All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for joining us. If that's what you're doing, if you've been with us all day, that's great. Maybe we'll give you some good information, and hopefully we make you stay. Let's take a look and see what this corn market's doing now. That's going to be the first thing we want to take a look at. Not the Dow. I had it over there just to do a little bit of a peek. But March corn up 11 cents, 6.55 even as last. That's pretty good. We're just up against the high. Maize up 9 3/4 cents to 6.55 as well. That too is a quarter cent off the high. How about soybeans? They were down pretty big, and they still are. Jan's down 20 3/4 cents to 14.63. March is down 21 cents to 14.67 1/4. How about the wheat in Chicago? The old Chicago wheat, 23 3/4 cents higher. That's some pretty good going. 7.58 even. This one's been kind of hurting your neck. It just seems like one way. It's got a lot of whiplash involved with these prices over the last few days or weeks. Maize up 23 cents to 7.67 3/4. How about hard red wheat in Kansas City? The old Kansas City hard red, 29.5 cents higher in the March, 8.62 1/2. That's about a penny off the highs there. Maize up 28 cents to 8.55 1/4. And then we've got spring wheat up in lovely Minneapolis, 16 3/4 cents higher. And that contract to 9.18 1/4, while maize up 15 cents to 9.15. And finally, let's take a quick drive-by what cotton's got in store for us. It's off 123 points. We're below 80, that 80 line in March. 79.72 is last in cotton. And these prices are brought to us by Bar Chart. Let's bring in our next guest analyst. That's going to be Todd Horowitz with Bubba Trading. He's in Las Vegas. Thanks for being on the show here, Todd. Anything jump out at you? I know this is probably the last week that we've got anything really going on. It's going to be the den of thieves, I call it, next week and the week after. Because if you're not, if you don't have to be in the market, you probably don't want to be, right?
No, and I love the new tie, by the way. This is the first time I've seen this one, but I like them all, but I love the new one you're wearing now. But, look, Scott, this is a trader, right? If we were on the floor, Friday's the last day, the triple witching cycle. I think we're putting a lot of pressure on the number tomorrow, CPI and FOMC on Wednesday, that really wouldn't change the economy one way or the other, no matter what they are. And certainly, you and I both know that the CPI number is kind of fishy always because it doesn't really tell the real story. And what the Fed is going to do, they're pricing in, 50 basis points. Could they go higher? Yeah. Could they really wrap one in here and go a full point? They could do anything. But it's not going to change the overall economy, which is in really sad shape at the moment right now.
So there has been some chatter, especially when in the products we talk about on Market Day Report when it comes to the commodities. Maybe we could see some inflation with a lot of these products if we saw the dollar really take a dive lower. Could we be to this point where we're going to get some sort of benign CPI or PPI numbers going forward, and that really takes the pressure off the Fed? They don't have to hike anymore. That makes the dollar a lot cheaper, and that could spur on some unintended inflation.
It could, but I don't think that the CPI is going to be that special, and nor do I think that the Fed is going to really step off the gas. In fact, I would tend to think, in my opinion, the Fed's going to be more aggressive than they should be because, again, if you look at what they've done, the first Federal Reserve ever to hike rates into a recessionary period,
right? I
think that they might step on the gas here, in my opinion, and it could get really ugly. And I think we're going to have to either see natural growth, through regular inflation or instead of artificial, because they're artificially trying to slow it, which you and I both know never really works.
And by the time they get what they need, it's like that big stone ball in the Raiders of the Lost Ark. That stopping mechanism now can't be stopped, and a lot of times they throw us off of that fiscal cliff, and we have a recession on our hands. I think that's what a lot of folks are worried about, don't you think?
Of course, but I mean, if they didn't change the rules on what a recession was, we were already in a recession, right? We had 2 negative quarters of GDP back to back. That is typically defined as a recession. So again, when you continue to change the rules and the way that you spend and the way that you're doing things, it's very hard to really keep up. But what we can really tell is that the American consumer has a lot less capital to spend right now, and they found a way to get into much deeper debt.
He who controls the rules, or he who controls the language controls the rules. That's what that is. All right. We're going to go away. We're going to pay some bills. Stay right there, Todd. We're going to come back to you after this. All right. Welcome back to Market Day Report. I am the Cow Guy, and the Cow Guy is a great transition, or segue even, to looking at these cattle markets. Why don't we take a look and see what's going on in Chicago with the live cattle? There we go. Feb's up 45 cents to 156 even. We've got April up 37 cents to 159.72. Let's go to feeders. That was the live cattle. Now we have feeder cattle. They're lower, and it looks to be quiet. I think Todd Horowitz is right here. 62 cents lower on that Jan to 183.30. March is off 42 cents to 184.67. And if we take a look at lean hogs and get back to Todd, lean hogs are lower. 72 cents lower in the Feb. 83.27. April's off 97 cents to 90.02. Let's bring in back in Todd Horowitz. He's with Bubba Trading. He's in Vegas right now. Todd, anything you want to address when it comes to the meats?
I think we're just really just in this big wide old range, Scott. Very similar. Even the grains are in the range. I think we're just in a big old range bound trading right now. In the feeders and the fats, we're up towards the upper end of the range, and the hogs are at the lower end of the range. And with crude oil up today, you can see a little bit of a reversal there. But I don't think we're going too far. I think that these markets are far too smart to get too active one way or the other. They're not exactly the most liquid under normal circumstances. And I don't think there's going to be a lot of major movement here, either to break down or break out. I think they have a bias to the upside, but I don't think there's a lot of room because of the economy, and that will determine, I think, who could become stronger, whether it be hogs or beef.
Do you track the volumes pretty closely?
I do, and they're way down.
Well,
they're down about 50%.
50?
Yeah.
Wow,
50.
I mean, that's pretty significant. I mean, so especially for this time of year, that's really significant. That makes a bad time worse.
Well, exactly. It typically, when we would, your best quarters are usually the fourth and the first. This has been probably the slowest fourth quarter. In 44 years I've been trading, this is about the slowest fourth quarter I can ever remember. So it does not bode well for the bulls of actually and other things coming into the new year. But again, anything is always subject to change. We have to be able to play the market as they give us opportunity. And right now, there's not a lot of opportunity. It's a great time to kind of sit on the sidelines and watch a little bit.
All right, well, we'll probably take that advice then. I really appreciate you coming on, Todd Horowitz. He's with Bubba Trading. He's in Las Vegas. We're not. We're in Nash Vegas. I'm going to throw this back over to Janet.